Earnings to dissect, but economic data also in focus. Second quarter GDP accelerating at its fastest pace in nearly 4 years. The Dow about 26 points. Energy continues to be a bright spot. Oil prices trading near a 4-year high, fueled by the prospect of a shortfall in global supply once U.S. sanctions against Iran come into play. Sticking with the Middle East, the Saudi Minister of Foreign Affairs last night at CFR said that the sudden rise in oil prices will not delay Saudi's diversification plan away from oil. He said that the country is still committed to reducing its reliance on energy. Worth noting that oil names like Devon Energy is up this morning nearly 1%. Tech getting a bid this morning on the heels of that JP Morgan upgrade on Apple, citing the iPhone maker's quicker than expected move to a services business and stronger than expected price increases. Shares of Apple up 2% in early trade. We're also keeping a close eye on emerging markets. The IMF boosting its financing package for Argentina to $57 billion, reducing the risk of a default. Now, the agreement says Argentina's central bank can only intervene to stabilize its currency if the peso depreciates below 44 to the dollar. You can see it's just around 39. Speaking of emerging markets, Philip Morris says due to the currency headwinds and the drop in the Turkish lira and other EM currencies, it is cutting its 2018 full-year forecast. But that's not the only headwind. Conagra reported this morning, citing an inflationary environment. McCormick talked about currency volatility. H.B. Fuller mentioned raw material costs. So there are certainly a number of risks heading into this earnings season. Currencies being top of mind, and those stocks are in early focus today. Carnival, by the way, earnings and revenue beat, but its fourth quarter guidance was a bit soft, and that stock is down more than 7%.